Welcome back. You're watching In the Market here on AM Live, and of course we continue the conversation apace. This is what we're looking at, of course, this morning, the state of economy, broadly what is happening in the economy, the security exchange, the banking sector, also when it comes to export and imports as well, and just checking also general overview of what is happening elsewhere in the world as well as far as the state of economy is concerned. We are holding court this morning with Peter Biwott, who is the CEO of Export Promotion Council. We have also Dr. Collins Odote, who is a lecturer at the University of Nairobi, and also he is a columnist with the Business Daily and also an advocate of the High Court. Also, we have the CEO of Nairobi Securities Exchange. This is Geoffrey Odundo. We have also the CEO of Kenya Bankers Association, Habil Olaka, who is here with us this morning. We promise to circle back and see also how the Nairobi Securities Exchange is faring on so far. And we just want to hear from you, Geoffrey, what is really happening? Why the sharp decline? How is it related to the dollar? Maybe you can give us a broader overview of what is happening on that front.
Okay, thank you, Debarl. So 2018 has been a very interesting year for us. We enjoyed a very strong beginning. The first 3 months of the year, we were recording an average trading volume of about $10 million a day. This has declined sharply in the beginning of the second half to about $2 million, $2 to $3 million a day in the recent past. But the real attribute of this, today the exchange has over 70% of foreign trading on average. And what's happening globally is impacting directly on us. The increasing global trade tensions between the US and China, the issues around Brexit, the strengthening of the US economy, especially in the stock market, has seen a softening of investments or a softening of investment in emerging markets. And also the risks that face certain key emerging market players like Turkey and Argentina have just generally led to a total sort of decline in flows coming from those markets into emerging and frontier market economies. So that's been largely the fact that there's been an attrition of foreign investor activity, more so not exit. I think I'd like to clarify that. If you want to say exit, then we should be seeing actual turnovers, showing huge turnovers of money leaving, because you still have to sell the shares to retreat. But I think what people have done is sort of slow down their trading, holding their positions, as they look at how to manage the larger risks. To your question about the economy, especially around the shilling and its concerns, I must say that investors are very happy with the macros of the country. They're very happy with the stability of our shilling and the fact that it's predictable, because that becomes a very major challenge when you want to invest, when you're not sure about how the shilling will hold in the near term. And the fact that our shilling has been fairly within target range provides some level of confidence that actually they can be able to make investments and be able to exit without huge forex exposures. And it is not just a fact that the shilling is holding, but it's also supported by fundamentals. I think if you look at our forex cover, it's still around 5.6 times months in terms of cover, and all these parameters around how the economy is growing, our improved exports are increasing. So there are fundamentals that support the shilling, and which then gives a very convincing perception to the investors that Kenya is a strong economy. Now, the importance about the market is that there is a balance which you need to do. When there's an attrition from foreigners, and the domestic front has got to be stronger. But what we've seen also is that domestic investors have also been very shy of the market in a way. Most of them are actually putting their money in government treasuries, which they consider more stable. And I attribute that to the challenge that fund managers face in providing returns in the short term. I think investors, or especially pension funds, need to give fund managers flexibility to make return reports in probably semi-annually, to allow them time to invest and be able to get adequate returns from all asset classes, including the stock market. But when there's a short-term return that you need to make, you'll only look for those markets that are giving you those immediate short-term returns. And that has to change for us to be able to balance the foreign and local investment profile on the market. Because we do have a deep local institutional pool. Pension funds control almost 1 trillion shillings today, but just about less than 30% of that is in the stock market. If we had more, then we could actually balance these exits from the foreigners.
But also the reports that we've had dismal performance when it comes to listing companies on the Nairobi Securities Exchange. For the last 10 good years, we've had, I think, less than 5, if you could say, companies listing on NSE. What could be also informing this as well? Why is there a bath, or people are really gun-shy to actually list on the NSE right now?
There are many. What we've really sat down to really try and re-strategize that approach, because uptake has been a challenge, quite rightly put. We are a very attractive economy on many fronts. I mean, if you look at the growing sectors in Kenya, a lot of money, especially coming through PE funds and all these other venture capital funds, are targeting the same sectors that we are targeting.
Yes.
Telecom, technology, infrastructure, etc. Now, the issue around listings has been largely attributable to the fact that it's still a bit of more anxiety from issuers to come to the market because of lack of a clear understanding of the benefits, which we've been trying to do a lot to educate. We've been heavily, we haven't had a big government listing in the last, since Safaricom IPO, which was largely the largest listing in this region, and that catalyzes the market and encourages private sector to come. So I'd like to say that there's been a lot of factors that have been very external to what we can do to convince issuers to come. But what are we doing to change that approach? We are working towards increasing uptake by creating a new platform we're calling the Incubator Board, where companies will basically be able to be hosted on the exchange without necessarily having to comply with the regulations of the Capital Markets Authority, because they'll not be listed companies. Now, while you're hosted, you then get an experiential feeling of the market, in that you start feeling like a listed company, and also interacting with various investment and advisors towards creating or preparing you for a possible listing or raising capital on the market, with a clear understanding that you're already in the market in some form. And that sort of delivers or sort of insulates the anxiety that you have. So we are working on that, and we're also engaging with government to see how we can bring in more listings from the government sector, and a lot of good conversations are going on. This year we do expect to see a cross-listing, which we think will also be large, and we'll be able to create or sort of restart or sort of plug that negative run we've been having. So there's a lot of activity around that, and we do believe that the market is attractive enough for issuers to come in.
Right. Let's say from Collins Adote, I don't know what you're reading so far as what our CEO is saying this morning. Of course, also the glacial slowness on the uptake. What would be your reading?
I think the performance of the Nairobi Stock Exchange is invariably also a barometer of the performance of the economy. And the last time that the stock exchange was extremely robust was in the run-up to the 2007 elections. I think we had the highest number of new Kenyans joining the stock exchange. Before then, it was for old people, people who are extremely wealthy, but in the run-up to 2007, a lot of people got in. I think after that, for the last 10 years, the economy has been going through shocks and bumps. And that's also reflected in the performance of the stock exchange, especially for domestic investors. You know, people have money that for the bulk of them they consider almost wasted. People who, for example, invested in Mumia's sugar shares, which reduced heavily. People who invested in Kenya Airways. And I think because of that, there is less and less interest of ordinary Kenyans putting their money in the stock exchange. And I think that's something that requires to be dealt with, because unless you have confidence in the stock exchange based on performance, there's going to be a lot of people not being interested in going to the stock exchange. I think the related issue to that, if you look at the bad performance of some of the listed companies, it isn't because of the stock exchange. It is also because of governance issues. If you look at the challenges around Mumias, for example, if you look at the challenges around Kenya, so it therefore means that there's a link between how the stock exchange performs and how the larger economy and issues around corruption are dealt with. And I think that's something that we need to fix as a country, because unless we do so, then we'll continue having the challenges. My last issue is, and this is something that Geoffrey needs to do much more. He just spoke about the flexibility that's required, but I think there's also need for greater engagement with Kenya, so that people realize that investment in the stock exchange is not short term. It is not money that you make in a month, because that's what people did in 2007. We were running and saying, if I put in my money in a month, I will get 20% return, and we did. But now when you start not getting it, you're like, no, this is not what I want. I want to go to 90-day treasury bills. I want to go to something. We must have a much more longer term focus in our investment decision, because that's the only way the country and the economy will grow. And that's how we'll be able to support the stock exchange.
Maybe we can hear also from Biwott to tell us more, because I think Kenyans also have this obsession with you know, tangible assets like land. You know, they want houses, they want, you know, real estate. But when it comes to intangible assets like, you know, stock exchange and buying shares as well, I think, do you think also maybe the NSE has done a good job or a bad job in terms of educating the public of, yes, truly, it doesn't really have to be land, because the map of Kenya is not really expanding, right? And the population is growing exponentially. So what will happen 50 years from now when we have scarce resources like land? I think NSE and the shares should be the place where most Kenyans should invest. Do you think also maybe in terms of broadening their citizens' understanding on what really happens at the NSE should be taken on a wider scale?
Yes, I think that is the issue. I think what the CEO has said is the question of information. If we can be able to reach out to many Kenyans on the question of diversification of the economy, so that we don't focus, because really even when you look at what Kenyans are doing currently, they're investing a lot of their money in you know, real estate because of that quick money. So we need to enhance capacity building and sensitizations of Kenyans to realize that any savings you make, because the question of savings in the country is still quite low. So what we need to do is to reach out to, you know, the various sectors of the economy which are not well represented in the stock exchange, so that Kenyans can take interest in putting their money in shares. So I think that's one of the biggest questions that all of us should contribute to. The question of information asymmetry. And I think if the NSE can come out and hold forums and reach out to many Kenyans for all of us to understand, especially the middle class, you know, those guys who have a lot of savings, then this question can actually be able to be addressed. In terms of the economy, I think the economy has been resilient. In the last quarter, we saw that the economy actually grew by about 6.3%.
Yes.
But still, it is there are few sectors contributing to the economy. So if we can be able to, you know, ensure that majority of the sectors, and I know now we are focusing on the manufacturing. Like for some manufacturers, there are some of our leading local investors. Can we be able to reach out to them so that they can be able to, you know, put some of their savings to the stock exchange? So maybe this is something that we need to do.
All right, so you enroping also the SMEs as well. How has been the uptake? Because also we know within the 5 good years that I think for the last 5 good years, we've seen also almost 2 million actually SMEs closing shop because of unfavorable, conducive, you know, working or business environment as well. I don't know how this has adversely affected the NSE as well.
I think I want to just provide further insights on the 2 points that have been raised. I think one, the exchange is truly the reflective of the what's happening in the economy, because we cover all the real sectors. All the sectors of the economy are actually have companies listed on the exchange, and so depending on how the sectors perform, then you have a direct measure of how those companies will perform. If it's construction, if there's a construction boom, there's definitely a good performance of our cement companies. If there's a manufacturing boom, then you have a clear correlation to the market. So we've been seeing that, and so one, it's true that it's really a reflection of that economy. However, I think the investment philosophy of the Kenyan needs to change. I mean, the investment philosophy, the investment thesis that we have, we've been predominantly real estate focused.
Yes.
But you're also seeing there's actually for the first time a decline in the prices or in the valuation of real estate in Kenya, especially the high end. There's been a very huge supply of rental space in the high end, especially residential, that is actually empty today, and people are actually losing out or making losses. However, there are solutions available on the market on how to own property in Kenya. You can actually use the real estate investment trust, for instance, a product where you don't necessarily have to own physical property. You can own a unit of a stock in a property portfolio. We have other products that, for instance, today, if you wanted to own commodities like gold, you can actually use the market as well to own an ETF. So it's a lot around the education. It's a lot around changing the overall philosophy. We are looking at how can we cascade the educational content right from high school straight to the university, and also to the so that this new generation coming into the market clearly understands that you no longer have to hold physical assets, and hold intangible assets. And that's the approach globally. And so we're working on how we can cascade that education content downstream. We're also working, how can we then also make sure that we cut that upstream to even the current owners. And even if you have real estate today, you can convert it into shares and be able to have them and offer them to the public and be able to have a liquid asset. Because today, even if you had property and you want to realize it, when there's no clear demand for it physically, you can actually trade off the market. So there's a big focus around content, around access, around new products, and around increasing uptake, and we're working on all that. And I take this these reviews very positively, that we need to do more. We need to do more with our partners in the industry to provide more education and more understanding on the value that you have in the market, because it's been proven over 5 years the stock market asset class really outperforms any that you have in any other asset class in the economy.
All right, thank you. Unless Habib, you want to chime in also on this before we move on now to see also on your profitability.
I think,
and how you've been
the
resilient.
only thing, I mean, I totally agree with what has been mentioned. The only thing I was going to more or less like emphasize is the awareness creation. Because you recall in 2007,
yes,
when I would say when we had almost like a boom, and a number of people were investing without really knowing the mechanics. So you'll get somebody going to a bank to get a loan, to buy shares, and expecting to repay the loan from the proceeds of the return from the investment. Yeah. This is a long-term investment. This one is because the bank loan has got a determined repayment per month. You're not going to be able to get that kind of return from the investment in the shares to repay your bank loan. But I think a number of people are not aware. So the moment you invest, for example, and the share value tanks, meanwhile you have got an obligation that is permanent and is not moving down, you have got a mismatch. And I think a number of people may have found themselves in almost stuck. Now, if there had been awareness creation, to the point whereby the person knows that you cannot borrow on fixed debt to finance an investment in shares, I think that will be critical, and that will boost the uptick of the shares, because then people go into the investment knowing the repercussions.
All right.